Good afternoon, everyone. Welcome back. Hope you guys are safe over the weekend. Good to be back for another week of business here on the YouTube. All right, guys. So for today's pre-market analysis, as you guys know, we did shift it back an hour, and that's in light of recent events that we have going on around the world. Have to be careful what I say, what trigger words I use, because you guys know YouTube's very particular about what they allow in terms of freedom of speech and whatnot. So I have to be careful with what I say, how I say it. But again, these things are absolutely important to be mindful of. And again, that's why I shifted the usual pre-market analysis an hour back. Reason being is because typically whenever, I should make sure you guys can hear me first. You guys can hear me? Thank you, Joe. 5-5. Thank you, Joe. Thank you, sir. So again, one of the reasons why I shifted it back an hour is because I also want to see the open at 6 o'clock. Typically, I give you guys the analysis, send you on your way, and it pans out to script. However, going into this Sunday, the gap open that we see on these markets can change everything ahead of the week. So while I'm going to give you analysis here going into 6 o'clock, what I'm expecting moving forward, it is also very important to keep in mind all that can change when we open at 6 o'clock, which is why I want to be here at this open for you, with you guys, so I can share with you guys my internal dialogue and how that shifted what it is I'm seeing. So I've scheduled around 60 to 90 minutes to hang out here with you guys, go through my analysis, take some questions. I think my associate wrote that up in the message for the Telegram. Letting you guys know to bring your questions because, like I said, I also scheduled a good amount of time to take some questions ahead of the 6 o'clock open. So with that, without further ado, let's get right into it. Caleb De La Cruz, hola papa. Denisha, happy Sunday. Ahmed, hello Dylan, great to be back. Low risk, high probability week with all that is going on. Definitely going to be a lot of volatility, I can say that much for sure. A lot of people were, kicking and screaming for the volatility. Man, we'll put your seatbelt on. You're going to get it. Dane Trader, hello, happy Sunday. Happy Sunday. Joe, hello. James, good Sunday, glad to have you. Tommy, my man, hope you're doing good, brother. Joe, thank you very much. Matthew, hello. Eslam, thank you. Tyler, thank you. Mr. Nuller, all good, thank you. Olawale, happy Sunday. Matthew, should we trade the open? Man, you do what you want with your money, brother. It's about to start, guys. Yes, sir. Euro opened with a 12 pip gap. Yeah, we'll see what we get here at 6 o'clock. I'm expecting some jarring opening gaps going into specifically dollar, gold, and crude oil. But we'll see what they do with indices. And again, I'll share my thoughts on that. Amy Moore, hello. All right, guys. We'll go ahead and get right into this one. And then, like I said, I'll take some questions here once I get through my analysis. Julian, hello. Quasar Lord, hello. All right, so we'll get right into it. Dollar monthly chart. So we're going to be looking for higher prices on dollar, and especially in light of what's going on across the pond in the Middle East. That is going to influence dollar heavily because money pours into safe haven assets. Whenever things get uncertain, investors look for safety. And I'm not going to make the argument that the dollar is a safe investment, but that's the financial system. When uncertainty arises, money goes into dollar because it's viewed as one of the safest bets in the financial system. So we are going to see higher prices on dollar as we have been seeing, but this is going to be further exacerbated by what we're seeing with the warmongering and everything going on the other side of the world, right? So that is going to be influential with what we see in dollar, and I'm going to continue looking for higher prices, and I'm going to expect the repricing on dollar to be accelerated based off what we're seeing on the other side of the world. Crypto market crashed over the weekend. Yeah, I don't really care much about crypto. Amateur hour. I don't pay attention to the crypto markets much, but yeah, they did. And I think that's going to be a reflection as to what we're going to get in the stock indices as well. So long story short, dollar higher. When people get uncertain in the market, money goes into dollar. Money goes into gold. So we are going to see a risk off scenario, and we've already been looking for that. So what we're seeing in the charts was a precursor to what's happening in that part of the world, because we saw yields aggressively being repriced higher. that's telling me that money's going into treasuries, or excuse me, it's going into dollar and seeking safe haven, right? So what I'm using that information as is that's indicating to me that's likely to happen because we see that money pouring in there. There's people with a lot of money that knows these events are going to happen beforehand, and they're positioning themselves accordingly. So as you guys have known, I've been hinting at caution these past few months because these markets are extremely volatile and we are in a black swan event territory. People don't really appreciate that, especially, well, not everyone, but for people that aren't as well researched or hip to, I guess, what's going on, you may not understand why there's elevated risk. But one of the most important things, again, to understand is that these money managers, people that are managing millions and billions of dollars, they are very sober about the risks they're putting on. So why have we seen dollar in a consolidation all this time, right? Why have we seen NASDAQ in a consolidation all this time, right? That's because of what I was telling you guys. If I'm aware of what's going on and I'm telling you, you better believe there's people with major deep pockets that have that information as well, right? So if they understand these events are about to kick off, why are they going to risk millions of dollars of client capital? Doesn't make sense. So that's why we've been seeing these smaller ranges because of the lack of institutional sponsorship because of what's going on in the world right now. So the market participants and speculators have been waiting for those events to develop around the world to then place their bets, because now these markets are moving all over the place. It had to wait for a catalyst, and that catalyst is what we're seeing with the conflict between the two nations in the Middle East. So monthly chart, again, want to give you guys just some of the fundamental understanding behind what I'm going to explain and why, just so you understand that you don't really learn those things in school, unfortunately. Got to teach yourself or hear it from someone else. So we're looking for higher prices on dollar, and then I covered the real fundamental reasons why we're going to see dollar continue to be repriced higher. So looking at the weekly chart, or excuse me, monthly chart, we have been looking for higher prices. As you guys know, I took your attention to this balanced price range here where the fair value gaps overlap, and we got above that, right? So that's telling me we're going to run into this high, and then how we trade above that high, we have the remaining portion of this inefficiency here, which would be this purple region on the upside for the monthly chart. So looking for higher prices, hit the wick, consequent encroachment here, bounced, and now we're disrespecting this inefficiency, indicating institutional order flow is bullish. So massive repricing last week on dollar, in line with our expectations. We were looking for higher prices, and we have been for like the past 4 or 5 weeks based off these factors. So looking at the market structure, we also have a long-term low, intermediate term low here and here, and this will classify this as a long-term low, right? So the underlying market structure is bullish, right? And the reason why I zoom out to the monthly chart is because what have we done, right? We displaced higher, we retraced back into the range, traded into the discount inefficiency, and reaccumulated in a discount. And now it's going to be permitted to reprice higher. So we have been bullish dollar, but we were in a consolidation all last year. So the entire year last year, dollar was held. It was being held for a large range year. So one of the things that I teach and that you guys are familiar with if you've been studying algorithmic price theory for some time is that after we get for example, like a small range week here, we get a large range week after. So that also applies to all time frames. So because we had a small range year, right, the entire year last year since January was really a lackluster year, sideways. So we had a small range year, likely setting up for a larger range year this year. And that would make sense with everything going on in the world, election year, and some things that I can't talk about on YouTube, so we're not going to go there. But again, things to keep in mind with what's going on in the market. So small range year, likely going to have a large range year this year, and especially in light of all the events going on and coupled with an election year. Those of you guys that have been in these markets for some time, you do know there is a influence on election trading years. All right, so weekly chart, as you guys know, we were watching this weekly fair value gap here, which is the gray rectangle and down close candle, right? Told you guys as long as we remain above that, we're bullish, looking for higher prices. And then we got that repricing this week. So looking at the opening price, extending that through, hitting the bullish order block, and then expanding higher. So going into this next week, I'm expecting dollar to reach up into these highs here. That's what I'm looking at on DXY. And I even further like the fact that this was left a breakaway gap. If you guys will recall a few weeks ago, I told you guys I'd like to see this gap left open. and that would confirm to me we're in a strong market, right? And we're seeing that. So I'm expecting again a run above this high. So the clarity that has been long awaited, I was just actually talking with my team here ahead of the YouTube call with regards to, it's been long awaited to where we've had a market with market symmetry, right? Where dollar's higher, indices are lower, everything's moving directional as it should be. And I think we're starting to get that now going into quarter two going into April based off our analysis. And for those of you guys that don't know what that means, symmetrical markets just means everything's moving the way it should be. And that creates low resistance, high probability trading conditions. So again, still seeing bullish order flow, expecting a bullish weekly candle on dollar next week. So that's the weekly bullish order block. Yesterday or Monday into Tuesday, we dropped lower. That's the Judas swing of the week, accumulating the sell stops in a discount to then be repriced higher, right? And why is that logical? Because we saw ever since this market structure shift here, we've been bullish dollar. And if you guys will go through or recall the previous live streams, or if you've taken notes, you'll recall that the reason I trusted this as a shift in market structure is not because of the pattern. Patterns don't mean a lot to me. The fact that the yield market was telling me it's bullish. So you see how I use what I'm looking at in the intermarket analysis to confirm what I'm looking at in terms of market structure on dollar. So shift in market structure, we've been bullish into these equal highs here, the volume imbalance and the swing high, and we reached that. We've reached external range liquidity. So it's reasonable for the market after expanding to do what? To retrace back to equilibrium of this range, take out sell stops, hit the bullish order block and weekly fair value gap, reaccumulate and trade higher. And if you look at the monthly range, we opened April here. So what they do, they opened April, took it higher. Anyone that wanted to chase it long bought the breakout of this high. They naturally retrace it into the second week of the month, which is what we would expect is like a Judas swinger to make our low. So anyone that went long is now stopped out. That position was assumed by some smart money, interbank traders, and then redistributed to the buy side here. And this buy side here, the targets that I gave you handsomely repriced. So if you guys will recall also, we were looking at this fair value gap here as a key level. And this was really the determining factor of the week. I told you guys if we stay below this, we're going to be bearish. So if we were to hit it and start selling off and breaking down aggressively, that would tell me we're going lower, right? But as soon as we violated this on CPI, well, then everything's a green light for higher prices. And especially understanding how time and price come together, and then how intermarket analysis further confirms what it is that we're looking for, right? And everything just makes perfect sense. So on the daily chart, we took out the lows here, aggressively displaced away, and we created a fair value gap here on this repricing higher. So I would prefer to see this inefficiency left open on the daily chart and us just keep expanding higher into these equal highs here. So for my targets going into this week, we've already delivered this intermediate term high here. Again, beautiful delivery. And then on the upside, we have this inefficiency here in gray as the first target. Through that, we have the buy side here. And then we have these relative equal highs there longer term. Now looking at a weekly chart, zooming out further, above this buy side here, we have the buy side liquidity over here. So that's what I'm looking at longer term. And then if we displace through this high, we have the inefficiency here. So longer term, we're looking at bullish dollar. And then I want to go down to the hourly chart, but like I said, that can all change when we get into the 6 o'clock open. So again, clean bullish order flow all last week, Monday, Tuesday, making the low of the week when we'd expect in a bullish market, which again, I gave you last week. Market expands higher, trades into sell stops, reprices away from it aggressively, accumulating the sell stops and distributing at the highs here. So going into this week here, again, I want to see how we open because it doesn't make a lot of sense for me to talk about the hourly chart a whole lot. And then we open like up here, right? Because then that's going to change things significantly. So I'll keep the cards close to my vest for the lower time frames. And when we get the open here at 6 o'clock, we'll sort that business out. All right, T-bonds. So again, we've been seeing bearish order flow on the Treasury market, which has again been further confirmation for why I've been confidently calling the dollar higher and foreign currency lower to you guys the past few weeks. So we see here, we had this range from high to low. The market's retraced up to a short-term premium, hit that bearish order block, and then we were looking for it to sell off from there. Right, so we've been getting that continuation on the monthly candle, and we traded into the monthly fair value gap I gave you guys as a target on the downside. So we hit that perfectly last week. So now on the downside, we have this last down close candle here. It should be a bullish order block. And then through that, we have the sell side. And that's what I'm looking at longer term for treasuries. This is an extremely weak market based off the monthly time frame. All right, weekly chart, fair value gap here. We get down below it, use it as inversion. Again, we were talking about all this 1, 2, 3, 4, 5, 6 weeks ago. We're looking at these levels. We broke down from it, up close candle, trade into it, break down. Weekly fair value gap here. Told you guys this was the draw when we were up here. Told you guys last week before we started this week that I wanted to see us get below it, use it as resistance and sell off, right? So if you just look at like a fair value gap and you don't understand context or narrative, it's really easy to say, oh, well, that's fair value gap. It should hit it and find support. But that's completely lacking the context and everything I'm sharing with dollar, the monthly chart, the higher time frame. And that's what tells me how I know when to use a fair value gap as support or when I'm expecting a fair value gap to be violated, right? And that's narrative and understanding what you're looking for. So again, told you guys we want to see the market trade down through this fair value gap here last week, and we did so. So now we need to stay below that for the market to remain bearish. And then this weekly fair value gap here, that should even stay open. And I want to see this thing start reaching for the sell side here, the bullish order block here, and then the discount inefficiency on the downside. So those are my targets for yields going into this week. All right, daily chart on the treasuries. Market traded higher last week into the bearish order block, last up close candle here. Also mitigation block, if you guys remember. We were looking at this last down close here, the mitigation block, and this fair value gap here, right? And I told you guys I didn't want to see this one traded to because the mitigation block and the fair value gap here. So that's what creates the high of the week. Time and price. Wednesday makes the high on CPI. And then they break it down through the sell side and reach in for the low here. So moving forward, we have this fair value gap here above market price. We should stay below that. And we also have the weekly fair value gap. So we're likely going to see the market just nosedive from here. We have sell side here and these smooth lows here. That's too clean. So that's going to be the draw. And then below that, we have these inefficiencies here that I don't have labeled, but those are going to be my downside targets moving forward. All right, moving right along on the weekly chart. All right, so yields are absolutely ripping, right? So interest rates are going higher, and not only higher, but much higher, right? So we have higher interest rates to look forward to, which is, again, a part of the safety trade, as they call it, which is money pouring in the dollar. So with what we're seeing, we're likely going to see higher yields. And this is, again, how I confirmed the bullish dollar to you guys for the past 4 to 5 weeks, based off what we're looking at in the intermarket analysis, right? So it's how all these things come together that gives you the precision that you're looking for as a trader. So we got weekly expansion higher on the weekly chart on every single yield market. And again, that's further confirming the risk on bias that we were looking for, right? Seeing that continuous bullish order flow. So looking at yields, we have a weekly inefficiency above. And again, these things are just going to continue to be repriced higher, especially in light of current world events. So we have this fair value gap here above market price for the 30-year yield, same fair value gap here for the 10-year. And then I suspect we're going to get through that and even reach for the buy side. So I think we're going to see the 30-year rates upward of 5% again, longer term, with everything we're seeing right now. All right, daily chart, again, aggressive repricing higher on the yields, trading higher with inefficiency and bullish order flow, right? Down close candles, well, inefficiency here, supporting price, down close candle and inefficiency, fair value gap and down close candle, high probability, bullish order block, hitting that and then launching higher, in line with, again, bullish institutional sponsorship, which is what we've been calling for you guys. So looking at the daily inefficiency that we're trading in with respect to all the yields, I do want to see that continuously lend support if order flow is going to be bullish, right? So I suspect the low of the week to be made inside this fair value gap and continue higher. So there's no reason to violate that fair value gap. And if we do, then I'll have to reassess some things at that time and pivot. But like I said, where we open here in about 30 minutes will determine quite a few things. But again, no need to get below the daily fair value gap if we're going to remain bullish on yields. All right, so moving right along, looking at all the stock averages here comparably. Dow's been the weakest to the downside, followed by S&P, and then lastly we have NASDAQ, which is still being stubborn and held in a consolidation. Again, we're finally going to get the volatility we're looking for. Like I said, I've been hearing a lot of people that are disgruntled about the range that we've been in, right? And it's been a nasty range on NASDAQ really since the mid part of February, just sideways. So I do suspect, again, with what is transpiring around the world, we are going to see NASDAQ leave its range and to the downside. And then I'm suspecting it's going to look to catch up with the Dow, right? So Dow's been giving really clean market structure. We saw S&P at the highs. So where Dow made this higher high, NASDAQ made this higher high. NASDAQ did not make that higher high comparably here, right? So we were watching that real time, and then we wanted to see how we trade from there, right? And then we displaced through this low. Told you guys watch the fair value gap, breaker hits that, and then aggressively breaks down, nosediving for the sell side. Again, haven't got the same magnitude of lower repricing on NASDAQ, but again, I'm suspecting it's going to look to follow suit as a six sister type of play moving forward. And again, S&P really weak. After making that SMT, we qualified this intermediate term high to you guys last week on the daily chart, right? Telling you guys if it's going to be bearish, there's no need to get above the recently created intermediate term high, right? So the market structure has been priced in bearishly, where we're attacking intermediate term lows and respecting intermediate term highs. So looking for lower prices on indices in the subsequent week. All right, going right into ES monthly chart. We have this monthly fair value gap as a draw going into next week, and then how we trade here is going to be influential, right? If we start to accelerate down through it, we have the inefficiency here and here below market price for ES. But again, we want to take it one day at a time. So we do have all those levels. I do suspect we may get animated on the downside in light of everything we're seeing. So I am looking for stocks to crater, especially when they took it into a deep premium, right? I don't see BlackRock buying S&P at 5,000 with everything going on in the world right now. And if you just think about it for a minute, it makes sense, right? And that's what I'm seeing in the crypto market as well. Crypto guys, don't come at me. I'm looking at this as offset distribution in a premium, and we're going to see Bitcoin at 12,000 soon. That's my opinion. I'm not right. I don't trade it. I have no horse in the race for crypto. Just that's my opinion moving forward. So I think they took it up into a premium early on in the year is like a Judas swing in the yearly range, and it's pricing at a premium. That's how I'm looking at it. I'm going to take it day by day and see what the market gives me, but that's what I'm looking at on a longer term perspective. But like I said, though, we do still have to take it day by day. So we have this monthly inefficiency here. How we trade there is going to be influential moving forward, but you want to have this level on your chart. So again, one of the nice things about the current market conditions that we have is that we have clarity on the monthly chart now, weekly chart, daily chart, everything's moving, which again makes for high probability trading, which is not what we've had in recent. Not that it can't be traded, it can be. We just have to know how to be nimble, how to be surgical, and it's more so favoring a scalper's market. If anyone's tried to swing trade NASDAQ in the past few months, you probably just donated money to the stock market, and that's because of the recent consolidation we've been in. Right? So we also have to know what market profile we're in and how to know when to use specific models, right? One shot, one kill, capturing the entire weekly range. I don't really do that when the market's in a consolidation. It's rather difficult to do. Whereas when markets are trending on a monthly, weekly, the dollar's moving, everything's in line, well, I'll hold for the daily range, I'll hold for the weekly range, and I'm much more aggressive about running up equity, right? But you have to know how to manage certain conditions. So looking at the weekly chart here for E-mini S&P, weekly high, we traded above this high, so we took out the buy stops. Now we have a swing high on the weekly chart. So candle 4, I'm expecting it to continue sinking lower. I also like the confirmation that we closed down below these two down close candles. So bullish order block has been closed down below, indicating we're seeing a change in tide or a change in the order flow. So again, we have that monthly fair value gap here. We have those equal lows there on the weekly chart as a draw going into next week. And if it gets really animated, we have this inefficiency here on the downside on the weekly, and then all these down here. So we can see a rather nice sell-off on the stock averages going into next week. All right, so again, daily chart, we've been watching the S&P here, right? And recall why the S&P was important. If you guys will remember how I was walking you guys all through this, the reason I was confidently looking for lower prices and lower market structure in stock indices was because of what we're seeing in the dollar, right? So it's how all this comes together that gives you that clarity. My routine, my process about trading, going into the markets each day is the same exact thing. It may seem complicated at first, especially if you haven't spent a lot of time with me, but what I do is very systematic and it's very consistent day in and day out, right? And because I have a consistent strategy, I'm able to get consistent results over the long run. Right? It's just about doing the same thing, trusting your models, trusting what you're looking for, and again, having a routine process. So again, that's what I make available to you guys here on Sunday, which is my pre-market prep. I'm already doing all this on my own anyway. I just figured I would make it available to you guys who also need a game plan for the week, need to understand intermarket analysis, market structure, because I really don't know how people find their way in the market without understanding how these things come together, or not find their way, but at least do so with a high degree of confidence. I know there's a lot of ways to trade and make money, but having the confidence in what you're doing is what takes away the anxiety when you're trading, right? It's what takes away a lot of the uncertainty that comes with just not having a system, right? So that's what I make available for you guys here on my extra time on the weekends. So looking at S&P, again, wanting to just keep in mind and reiterate to you guys why I look at dollar, because that's what gave me the visibility that Dow was weak, S&P was weak, or NASDAQ is going to be, and the S&P was weak. Right? And it's how all those things come together that indicate those certain things to me. So we got an S&P with the NASDAQ at the highs. Again, qualified that as an intermediate term high to you guys, saying if we're going to be bearish, there's no need to get above that. And then we were also watching the daily fair value gap, this one right here. So I also said that if we were going to be bearish, we're going to stay below that. And then look at the bodies. Look how it's all respecting the midpoint. And again, indicating it's weak. And then we get the rotation lower, equal lows here and here. So this was like a sucker's play here, right? They drop it lower and then they retrace it higher. And everyone think, oh man, the bottom's in. Man, look, double bottom. It's real support. This thing's really going higher now. And then they wash it lower on Friday, running on that sentiment. Right? And I told you guys last week in my dialogue when they left this low intact here, and then they retraced it and we opened Monday here. I was walking you through that real time, right? Showing you how they're priming people to get it to look at like what? Oh, the market's going higher. Look, it's support. And look at how good a support that was. Wrecked. So it's about understanding how these things come together, and that's how you get into the winner circle, right? That's how you understand how these things are going to happen before they do. So we see the daily fair value gap, look at the perfect resistance there, and then we sell off down through the equal lows. So moving forward on the daily chart for E-mini S&P, we have these equal lows here and here. And then, I mean, you can really draw all these levels as key targets. I'm not going to do it all because I want to keep it clean. But all these daily highs here, or lows, excuse me, if you look at it on a 4-hour or a 1-hour chart, all those can be your targets on the downside. Through these equal lows here, we have this inefficiency. This down close candle is a target here. But since I'm not bullish, I can use the bullish order block as a target, but I'm not expecting it to be a bullish order block and like find support and trade higher. It can do that, which is why I have to take it level to level. However, I do suspect we're going to get down into these lows here. So I suspect we're going to trade down into this monthly inefficiency here and continue to accelerate down through it, especially if we get continued acceleration higher on the dollar. So yeah, we have these equal lows here, the inefficiency down here, these equal lows on the 4-hour chart. So there's several equal lows below market price here, here, and this one's really clean. This has 3 lows, and then we have these lows down here. So we have quite a bit of downside on E-mini S&P. Again, as long as we continue bearish market structure as we're seeing here. So as long as bearish structure continues to be priced in and we continue to see bearish order flow, I'll be looking for lower prices on E-mini S&P. Make sure. All right, so NASDAQ monthly chart. Again, it's been more reluctant to sell off, but I'm expecting it to look to catch up rather soon. So we have this monthly inefficiency here below market price. I'll look at as a target, and that gives us still a good amount of range for a target this week. We have this monthly fair value gap, and then if we get animated down through that on the monthly chart, we have this inefficiency down here. So NASDAQ's still been in its range. Like I said, expecting it to break the range to the downside this week. And again, look to catch up with the S&P and the Dow, respectively. So we still have these equal lows here. They left intact on NASDAQ. We could just gap down below that. So that doesn't give much of a target going into the week, because we could open and we could even gap below that. So we'll have to see what we do. And again, that's one of the most important things about the risk management. And that's one of the things I was actually going to say earlier with regard to why it's important to understand the conditions we're in, right? And why large institutional investors haven't been looking to take on risk. And then that was the point that I actually forgot to mention, which is the most important one. Why aren't they looking to take that risk? Because of what we're seeing in the markets right now. People that are holding trades over the weekend, they're shitting the brick right now. And I hope it's not any of you guys, but that's why I don't hold trades overnight in these types of market conditions. In these type of market conditions, especially going into with what we have, with the war and the inflation and whatnot. But some things to keep in mind is that imagine being in a trade like 5 contracts in the NASDAQ or 3 contracts, and they gap the NASDAQ down 200, 300, 1,000 points, right? These funds respect that risk. So if they're trading hundreds of contracts in a climate like we're in now, what if they gap the NASDAQ down to 3,000 points? It can happen. So they're having to respect the risk on that side. And that's why I don't hold trades overnight. And I don't hold trades over the weekend anymore because of the climate we're in. I don't trust it. Like, I wouldn't be able to lay my head to rest at night and still feel comfortable about the positions I have, knowing anything can go off at any time in this world, especially in the climate that we're in right now, right? So that's why we have to respect the risk more so than ever. And again, that's another reason why we've been in a consolidation, because of that lack of the institutional sponsorship. So looking at the weekly chart, here we have these equal lows for NASDAQ. Shared this monthly fair value gap as a downside target. And then we have these equal lows here on the weekly. That would be a nice target on the downside to reach for. And then through that, we have this down close candle. Those are my targets going into the next couple weeks. And then from there, we'll have to reassess. Then we could even look for range low, range high, and even trade down into a short-term discount of that range. But like I said, we'll just take it week by week. All right, daily chart. So we have this daily inversion fair value gap here, keeping prices at bay and selling off, still in a range. Again, as long as you remain below this high and above this low, we remain in consolidation market profile. So I'm expecting it to break down. Tommy, seeing the same as you on NQ, like mines? Yes, sir, Tommy. Yes, sir. A lot of bank to be made this week in light of the volatility we're going to be seeing. So divergence at the highs, NASDAQ's still in its range, but they left all of these equal lows here, 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 and I suspect that's going to be targeted going into this week. If we get acceleration down through that, which is what I do want to see, we have been in a consolidation here and staying above this daily fair value gap, right? So consequent encroachment, or the midpoint. We found support there. We've been unable to break down below that level, right? So with the, one second. With the daily chart, again, they've been holding it in a range, but I am expecting it to sell off because of what I'm seeing on dollar and looking for it to catch up with the other averages. And again, we have these equal lows here and then these equal lows on the daily. The reason I'm interested in the lows is because I am expecting we had a bearish quarterly shift. So what I'm doing is I'm doing a look back from the first day, and I'm casting back 20, 40, 60, and that's how I'm getting my targets. private mentorship group, we'll go into that with much more detail as we move forward. But again, just want you to have that in mind, why I'm looking for those targets. Where are the fund level stops that have been long? Well, there's equal lows here, here, here. And I'm suspecting the market's going to want to attack those fund level stops, just like it did with the Dow, right? Anyone that was long, anyone that saw this as like a double bottom or a bull flag and then a continuation of the bull flag, wrecked, right? So those equal lows here, that is sell side liquidity. And that's where the fund stops are, here, here, here. And it aggressively dug down into the sell stops at the fund level. And then again, that's why I'm expecting the other averages to look to catch up. And again, give you guys the targets, the discount erase that I'm looking for on the downside. All right, moving right along, hourly chart. We see divergence here with ES and NASDAQ. So where ES did not make a higher high, NASDAQ did. That's what tipped his hand to me that we were bearish on Friday. And then we stopped just short of these equal lows here. So that's going to be a nice target on the downside. Like I said, it'll be interesting to see where they gap it. They may gap it close to where we closed, or they could even gap it down below. We'll just have to see again what they want to do in that regard moving forward. Let me go up to the 4-hour chart, zoom out, and then you can see the obvious liquidity pools here even cleaner on the 4-hour chart. So I believe that's it. Yeah, let me touch on currencies momentarily, because I know we nailed euro to the wall. So because obviously I'm bullish dollar, I'm bearish foreign currency. So what does that mean? Premium arrays are going to be resistance in simple terms. Fair value gap here, up close candle, right, which is a bearish order block if we're bearish. And then look at how the market respects those levels. And then we get an aggressive sell-off last week, washing down into the equal lows here, which can be more clearly seen on the daily chart, right? So they didn't fool any of us. We didn't see this as like a low, and then look, the third low. So we had a triple touch. Now it's real support. We weren't looking at any of that. We were looking for the market to knife down through it, because that's where the sell stops are. So the market retraces to a short-term premium of this range high to low. Market retraces, bearish order block, and then nosedives for the sell side liquidity that they left intact here. And then same thing for pound as well. They really tried to sell the idea of support here in this range with touch 1, 2, 3, 4, and then bouncing. And then what's that doing? Everyone wants to put their buy stop there, right? Because that's the strong support, as the book say. And yeah, strong support. So that was our target on the downside, and that's why we were looking for that. And again, that's all on the heels of the bullish dollar that we were looking for and how all that comes together. So with that, guys, as promised, I will go into you guys' questions now. That's all I had to share with you guys. So I'll go ahead and get into your guys' questions now. Matthew, crypto crashed over the weekend. Yes, sir. Matthew Davis, Earl, thumbs up, everyone. Yes, sir. Thank you very much, Earl. Appreciate the support. The thumbs up helps us greatly. Yeah, so the safe haven investment is the gold. So money's flowing into gold and dollars. That's why we've been seeing gold on such a tear in light of the recent world events. Money's pouring into gold and dollar. So Matthew, with regard to if people are buying dollars, why aren't they putting it into bonds? They're holding the dollar for holding the dollar in and of itself. And also the safe haven investments, also money going into gold as well. Don't stocks sell off and bond rise usually outside of the past few years? Yeah, typically that's the relationship. That's why the way I teach it, or the way I look at it, is T-bonds, the Treasury market. The stock market typically lags anywhere from 6 to 12 months behind it. So because we've been seeing the Treasury market selling off so much, I'm expecting indices to follow suit. So it's like a backwards market that we have the Treasury market selling off hard, and we have stock indices at all-time highs. We're in markets that don't really make sense right now, and that's because of world events, the financial system, the change that's coming to the financial system. There's a lot of things that are happening right now that are influencing what we would look at as usual or normal. So hopefully that makes sense there, Matthew. Mr. Garrison, amazing that this stuff happened on the weekend just before all the banks report earnings this week. LOL. Yeah, interesting stuff nonetheless. Ahmed, excellent calls on bonds and yields. Kept me in sync with the dollar. Thank you, sir. Glad it was helpful, Ahmed. Love to see you killing it as well, brother. Do you think we come back for regular trading hours on ES? Yeah, so if really bearish, I don't always expect gaps to fill in. When, like, for example, if we look at, we'll go on the 4-hour chart. Like if we look in the recent bull run, right, when markets are really bullish, they don't always come down to their gaps. And we don't even prefer to see them come down to their respective gaps if it's really bullish or really bearish. So that's actually a signature. You can look for breakaway gaps. I'll give the YouTube some sauce here. Breakaway gaps isn't just limited to a fair value gap. There are volume imbalances, regular trading hours gap, liquidity voids, any gap you can use as a breakaway gap in the sense to measure the strength or weakness of order flow. So where I'm going with that is the regular trading hours gaps, if they don't fill in and we continue to show weakness, that's a signature that is extremely bearish to me, just like I would use like a breakaway fair value gap. So regular trading hours gaps don't always have to fill in within the right context, but that's also giving you insight in and of itself. So hopefully that makes sense there, Ahmed. And then keeping in mind earnings coming up. Yes, sir. Matthew, could you look at, could you go over the weekly dealing range on ES and NQ to give potential retracement targets on a higher time frame? Yeah, I believe I did. Yeah, I believe I did on the weekly chart. So hopefully I answered that question already there, Matthew. Jeff Trades, can you look at BTC? Yeah, let's take a look at the crypto market. And there's definitely blood in the water on that market. Let's take a look at Bitcoin. Yep, so Bitcoin has sell side liquidity here, here, and here. So these equal lows would be a downside target for Bitcoin. Let me take a look at Ethereum. Let me go up to a higher time frame. So yeah, for the crypto folks, I know there's quite a few of you guys. We have a monthly fair value gap here for Bitcoin that we'll likely trade into. And then what you want to do is run quadrants on that. And then look for all those quadrant levels as a downside target. If we close below lower quadrant, we're going to midpoint. If we close below midpoint, we're going to the lower quadrant. If we close below the fair value gap, we're definitely going lower longer term. So that's how I look at the monthly chart on Bitcoin. Yeah, weekly chart, we have this weekly fair value gap. And then if we get animated down through that, we have these weekly inefficiencies here as well. There's nothing I like about cryptocurrency at all-time highs when we have a war breaking out and dollar is extremely bullish. So all those factors is what indicated to me that we were likely already going to see that sell-off in stocks, in crypto, right? Because it's a risk-on, risk-off scenario. So if we have risk-off, which is money pouring in the dollar, it's going to leave risk assets like digital assets like crypto, stocks, foreign currency, and all the above. So there's a real fundamental factor as well with intermarket analysis that tells us that these markets are weak. And looking at Ethereum, just to complement it with Bitcoin, so it's already traded in its weekly fair value gap. So we have the weekly fair value gap down below it. And if we sell off aggressively, we have all these clean lows here on the weekly chart. There's a huge sell side liquidity pool down here as well. And then we also had an SMT between the Ethereum and Bitcoin, whereas Bitcoin made an all-time high and Ethereum failed to. And now we're breaking down with a bullish dollar. So all those factors here make me want to look for lower prices and discount arrays on cryptocurrency. Jeff, hopefully that gives you some clarity going into the week. I'm not trading it. I don't have a horse on the race, so I also do want to preface it with that as well. I am not trading this asset class. So take my opinion with a grain of salt. Was wondering if you, Denisha, was wondering if you know which charts are best to use as a correlation for copper, positive or negative. So copper in particular, what's the ticker for copper? Someone help a brother out. Let me know what the ticker is for copper. There it is. I think I got it. There we go. HD. Thanks, Olawale. All right, there you go. All right, so yeah, looking at copper. Yeah, so for a correlation, HD, thank you guys. Much appreciated. So looking at copper, what I use for commodities, I'm trying to think of where I discussed it, because I know, Denisha, I know you're in the Discord. So I remember I did a teaching. I don't know which one it was. It was that day I shared crude oil and what I use for commodities specifically. So whenever I'm trading like currencies or futures, I'll use like the dollar for the barometer. But if I'm trading commodities, I'll use the CRB index. So for commodities, the CRB index, again, weighs out all the, not all, but a lot of the commodities. So with that in mind, because we see a CRB index was bullish, what that tells me about the underlying commodity market is that it's bullish as well. And that makes sense with everything going on around the world. Things are getting more expensive. Food is more expensive. Metals are more expensive. And that just makes sense with what we have going on with inflation and money printing and all that business there. So there's a real fundamental factor as well behind why we're seeing bullishness in the commodity market. A lot of the, like what they have like 30 food processing plants that mysteriously burned down. So there's a lot of things that are going on, again, behind the curtains that are also pushing the prices of commodities higher. So again, I just want to touch on the real fundamental factor. I know you guys have heard me say I'm expecting commodities to be a big mover this year. So I also want to share why, because there's a lot of things going on that support why they will be likely repriced higher. So for copper, what I would use would be the CRB index to confirm the underlying strength of indices and look at how that comes together. So that's what I would use there for a correlated asset, Denisha. Okay, I know which video that is. Awesome. Yeah, so I'd use that one in reference with any commodity you'll be trading, and that'll give you clarity with regard to the overall commodity market. Because all boats rise in sync and low tide, right? So understanding the commodity market, just like the stock market, right? If the S&P is really bullish, which it has been, it probably goes without being said that, you know, Microsoft is going to be bullish, Amazon's going to be bullish, Google, Nvidia, and all the above. And it's really the same thing in the commodity markets as well. But it's not like just looking at Google and, okay, Google's bullish, that's why the market's going higher. It's about looking at the average, which is the S&P 500, which is all the stocks. So if S&P is bullish, you can trust buy programs in your stocks. If you're trading commodities, you can use the CRB index and then go into a commodity like gold, bullish, silver, bullish, crude oil, bullish, right? So with those markets, you definitely want to use the CRB for all commodity traders. Denisha, thanks for that. Have to go back to my notes. Awesome. Glad that gave you the clarity you need there, Denisha. All right, it says I'm back online. All right. All right, glad that was helpful for you. What do you think about silver? Let's take a look at silver. Yeah, silver is an interesting market. The metals, the reason I don't like to trade metals is because they are so manipulated. Metals are one of the most manipulated asset classes on the planet. And if you think about it, right, gold has no business being where it's at now. Gold should be trading at several multiples higher if you take into account real inflation. So the metals market, I think I want to phrase this. The metals market has been so artificially suppressed for many years. And if you see like JP Morgan, right, they constantly get a slap on the fine wrist for doing what? For spoofing the metals market. So they literally rig these markets every single week and year. especially the gold market. So no market is more rigged. I mean, they're all rigged, right? They're all, controlled by AI and whatnot, but specifically the gold market and metals as well. So metals in general are generally heavily manipulated, and outside of like wartime events or famine or you know uh, global upheavals, gold's not really going to move around a lot. It's just been in like a nasty consolidation, like on the monthly chart for a really long time. That's why I don't really like to trade that asset class as much, because it is so highly manipulated. Gold should be at 15, 20,000 right now. Not really going to argue about the valuation, why I think that. There's a lot of factors why, but metals are such a manipulated market for that reason. So that's why I don't prefer to trade them. And if you look at the price delivery, like on a weekly chart, it's just not anything I like to trade. Do I invest in gold and metals? Yeah, I do. I do accumulate precious metals as an investment long term. But for trading wise, I don't really look at it. But looking at silver, if we continue bullish on the monthly chart, we have these highs here, and if we keep showing bullish order flow on the weekly chart, I suspect we'll get there. But we'll have to see how we trade. The metals market isn't something I'm terribly interested in calling, because if I did, it wouldn't be pretty. So I know where my strong suit's at, and it's not the metals market. All right, so we got the 6 o'clock open here in about 4 minutes. So I'll have to take a couple more questions from you guys. Matthew Davis, do you believe Bitcoin will go to zero? I don't know where Bitcoin will go. If it went to zero, I wouldn't be surprised, but I don't talk about things I don't know. If I do know, I'll talk all about it. If I don't, I won't say much. Ahmed, perfect, understood. Thank you so much. Appreciate the sauce. Yes, sir, Ahmed. Appreciate you joining us, brother. HS, do you look at seasonality every quarter? Yeah, I'm always factoring in seasonality. Seasonality is something that I weigh out frequently. It's not like a holy grail. Like a lot of people think like, oh, COT reports or seasonality is like the secret that they're missing, and it's not. It's just another tool to use in conjunction with everything that we already use in our analysis to begin with. So that's the key with understanding. Yes, it's going to give you more precision, but if you just look at seasonality or COT as like a secret or like a gimmick, it's not going to work like that. Like you have to understand how all these things relate together, right? Like COT index has been bullish since the start of the year for dollar. So that was another reason why we were bullish since the beginning of the year. But that's just an additional factor. So when we were bearish on these weeks here into the sell side, you also have to know the technicals, because if all you look at is the fundamentals, you're trading blind. Fundamentals with the technicals and they come together, they form a really nice tapestry, right? Because why was I confident that this was dropping down into a discount, absorb the sell stops, shift in market structure? I'm trusting that because of the yield market, because of the bullishness in COT reports. So all those things come together to just give me additional confidence, but nothing is a really standalone tool or indicator. So hopefully that communicates that clearly. I've had that happen before. Like someone will like see SMT and they'll just look for SMT, and then they realize, well, that's not the secret. Or they'll just look at COT. All I got to know is the COT reports, and I'll just buy every day. And then you come to find out that those things aren't as effective as a standalone indicator. But with everything that we look for and that we teach, you'll see that you will get the precision that you're looking for with how all those tools really dovetail together. HS, okay, understood. Thanks, brother. Yes, sir. Yes, sir. Eslam, what is the correlated pair with nat gas? That is a good one. Any other natural gas traders here? I'm not too sure. I know the overall energy markets like crude oil, WTI and Brent crude. Brent crude is the European oil, WTI is the United States crude oil. So you can use nat gas with the oil markets, but I don't know. I know they're correlated, but I don't know how heavily correlated they are. I know, each market has its own characteristics. But if anybody does trade natural gas and help my brother Eslam out, that'd be greatly appreciated. Excited to possibly witness a weekly daily turtle soup play in indices. Is there a Sunday opening macro silver bullet? I don't really trade Sunday that much. I don't make it a habit to do that. There's movement based off time and price using the hourly candles, and yes, there's macros in those times as well, but there's not enough movement for me to see it worthwhile to trade. Alrighty, guys. So we have the opening here in about a minute. So we'll see how we open. hang out with you guys, give you guys some commentary based off what I'm seeing on the open, and then we'll pack it up, call it a day, and look to get back to business here for the coming week. It's about 15 seconds. Let me take a look. This is the only monitor I'm looking at right now. I don't have the whole, I don't have the entire battle station powered up here. Let's go down into our 15-minute chart. All right, so relatively unchanged at the open for NASDAQ. Let me see what they did with the dollar. Okay, so relatively unchanged at the open. Looking at NASDAQ. All right, great. So on the hourly chart for NASDAQ, now that I see where we open, we have a dealing range from low to high here. So we can trade down into it as far as a discount. It doesn't need to because we are already in the expansion phase on the daily chart. So like I said, I prefer to see this inefficiency here left open. It can trade down into it and that won't change anything, but I still will be looking for higher prices on dollar. And the reason I want to see where we opened was because if we opened up here, then that would cause me to weigh certain factors out. But based off opening relatively unchanged, we can retrace into this range some, but I'd prefer to just see it stay strong and look to reprice into these key levels. Looking at the NQ, pull up a 4-hour chart. We have these equal lows here, and I'm going to be looking to ride a setup into there Monday morning. So that's what I'm going to be looking at moving forward on the NASDAQ. And then we have all of these equal lows here as a downside draw on liquidity. So I'm expecting, again, in light of what we have going on, we are likely going to see much more volatility in the markets, much more speed in its repricing, and aggressiveness in showing a willingness to reach for targets. So I'm expecting price delivery to open up and improve moving forward. So we'll see what we get going into this week. And quite a bit of volatility at the open. You guys can see a contrast in the candles. Matthew Judah swing. Yeah, I'm already building in short positions for the week. Yeah. So for S&P, we have the hourly chart here, and we have this mitigation block down here. So watch that as a potential target for a sell-off lower. So we'll see what we get. Again, if we see continued strength in dollar, I'll continue to look for lower prices in indices. But again, the order flow has to remain bearish. And what I mean by that is I want to see intermediate term highs respected and premium inefficiencies continue to be respected as we sell off to the downside. So glad we were able to watch the open. Again, relatively unchanged. So we'll see what we get going into Monday. So I gave you guys the targets, the analysis. Everything should be relatively straightforward on that front. So with that, guys, that will be, hold on, let me make sure I touch on everyone's question. Matthew Davis, I'll be scared to trade next week. LOL, these are huge ranges. Yeah, expect the ranges to open up big time, brother, for sure. But again, that's why you got to manage the risk and not risk too much. You know what I teach. You know how we do it here at Adora Trading. Low risk, high probability. When you know what you're doing, you don't have to risk a lot of money to make a lot of money. If you need to risk a lot, it's probably because you don't really know what you're doing. So we need to keep risk low, keep the returns high over the long term. So that's how we do it. That's our motto. With that, guys, that will be it for me this weekend. Hopefully I touched on your questions. Hopefully you guys had a good time hanging out here pre-market on Sunday. Appreciate you guys joining us. Have a great rest of your week. Good luck and good trading. Denisha, be safe this week. Adora Trading team. Yep, you as well, Denisha. Denisha, thanks for the stream. Don't forget to hit the like button. Yes, please do. That's very much appreciated and very helpful to us here. Joe, thanks, Dylan. Yes, sir. Thank you, Joe. Take care. See you, Matthew. Thank you, sir. Julian, thank you. Absolutely. Thanks for the gems. Absolutely. Pleasure's all mine. All right, guys. Have an excellent rest of your weekend. Take care. See you guys.